Hey everyone, it's Blair here at Time Trades. Thanks for joining me this long weekend in the United States. Today is Sunday, June 19th, and this is your weekly update. I want to start with a little bit of PowerPoint, or in this case, Keynote, a few slides just to explain the changes that I rolled out this week. I think it's a good opportunity to just kind of take a step back and do a little checkpoint on the progress that's being made within the time trade system and some of the changes to make sure everyone is aware of what's going on here as we slowly but steadily get better every week. I use this pyramid frequently to explain the various tools within the time trade system and how they work together. And starting from the most important to the least important, we've got price. So this, of course, is how we get paid and manage risk and measure success. And no successful, consistently profitable trading strategy can exist without solid risk management. So this is where things like setting stop losses at intelligent levels can help, and magic levels can certainly help identify prices at which a good stop would make sense, as well as using things like Heikin-Ashi bars to try to smooth out the trends and make it easier to see the trend that price is having. Next up is context. Now, this is understanding really that, not every day is the same and not every price is the same. So we're looking at things like tendencies, patterns, habits. These tend to have weekly precision. So, it's not like pinpoint to the day. So these are tools like the medium pivots and the small pivots that you've seen me add over the last couple of months. Medium pivots and small pivots are really only like about a month old. So it's important to understand that these are new tools in the Time Trades toolkit. And we're still working out and optimizing and figuring out how to best make use of these things. We know there's predictive power there. We know that they add value, but just turning that into consistent execution is a work in progress right now. Okay. Also part of the overall context is things like the cheat code, short-term waves, and Gann waves. They all come together to create an overall sense of timing context. And then we come to the daily probabilities. And I think this is what people like the most about time trades, and they gravitate to the most because it's got these daily probabilities of a move, right? So these are daily precision. They're subject to inversions, which means that calls for a pivot high might end up being an actual pivot low. And these need to be considered in context. These are the third most important, but I think some people treat them as the number one most important thing. So these are the 6 probabilities that are generated for every day in the past and the future. And these are probabilities of a pivot up or a pivot down, or probabilities of up days and down days. Okay, so this is really the framework that I suggest you use when you take advantage of the Time Trades toolkit. So it's also important, like any toolkit, it's important to know the limits of time trades and how it works. I mean, you wouldn't use a screwdriver to do the job of a hammer. So it's important to understand that the time trades price data starts November 1999. Okay, so this means that timing cycles that are longer than that will not be reflected in the probabilities. So things like many outer planet cycles like Saturn and Uranus will not be reflected in these probabilities. We just don't have enough timing or price data to train the model to pick up on these longer cycles. Also, that means that any newer securities, could be a coin, could be a stock with 5 years or less of price data, will have reduced accuracy. So this is just something we need to, I guess, live with. In general, I try to ensure that every new every new symbol that I add to time trades has a minimum of 3 years. That's kind of the minimum bar, but it's important to understand that that's a minimum bar, and the more price data, the better. Okay, so that's the limits of time trades. So let's take a look at the recent improvements that I launched in the past week. Okay, so now that I've reviewed all of that background, we can get into how things are improving. And what I've done is I've transitioned from 2 predictive models per symbol to 6. So now there's 1 model per probability that's generated. So this means there's a lot more detail in the forecast that's being generated. The next improvement is that models are now trained on all of the price data. No data is held back for testing. And this means that the forecasts are more stable. Model testing is now done offline so that the probabilities that you see are based on all of the price data that's there, not a subset of it. And this means that there's going to be less change in the model from day to day as the models get retrained. Models are still being retrained every night, but they're being retrained on all of the data, not a subset of it. And this slide shows a summary of kind of the before and after. So I'm using Ethereum as an example here. You can see the before picture in the top left and the after picture in the bottom right. You can see what I mean in terms of a lot more detail being present in the forecast. I think over time, you will notice that there's a lot less day-to-day variability as the models get retrained. Okay, so I wanted to cover that announcement, I guess, of the improvements in the daily probabilities, and also just sort of review some of the limitations of time trades and also how to make the most of the time trades toolkit. So let's transition over to TradingView here. We can cover off a little bit of, I guess, some of the recent price action that we've been seeing. I'm sure, like I was really stunned by this huge dump yesterday in Bitcoin, very aggressive sell-off. And then I turned on the time trades moon void of course indicator here. So we're in TradingView, we're on a 30-minute chart, and I turned on moon void of course, and sure enough, there's a big orange box right around this dump. And what does a void of course mean? Well, in general, that means that you can expect fake outs and reversals during that time frame. Okay, so it made total sense that there would be a big reversal here all the way down to 17,600, reversed up and got above that magic level and faded a little bit. But this is actually really quite positive, at least in the short term for Bitcoin, that it was able to regain that magic level at 19,000. And right now it's challenging the magic level here at 19,800. Okay. So this is actually a relatively bullish pattern, at least in the short term, because generally when price will tag a magic level like this, it will pull back. Now, what happens next is really what's important. Is it going to fail and go down all the way, or is it going to recover and potentially make it through? Because these magic levels, they tend to need a little bit more energy in order for price to cross it. So one of the most important parts of the system that I'm slowly developing here based on all of this information is looking at the price action around magic levels. So if crypto is able to sort of regain the 19,800 and separate above it, then we can sort of target the 21.6 level up here. So this is what I mean by price being most important. And a real simple way of looking at price is to look at the direction of the last magic level cross and always trade in that direction. So if we zoom out here to a 4 hour, by using that simple rule of only trading in the direction of the last magic level cross, you can stay on the right side of the trend, and that is so super critical, especially in a fast market like this. So up here we can see we crossed a magic level going up. That's bullish. The next one is relatively close at 32. It got rejected here. And then it came down below the magic level at 30,600. This is a magic level cross, so that's a bearish one. Came back to retest, failed, came back to retest again, succeeded kind of, and then it crossed down again. So right about here, we've got a pretty clear indication that this magic level retest here at 30,600 is going to fail. It's had 1, 2, 3 attempts to get through. This one got through partially before failing. So on the whole, it was some very bearish price action. And once you start to see things price separating here from a magic level, you can pretty much count on it going down to the next one, right? And after that, it was just like a waterfall all the way down. And ultimately, we've got a little bit of a mini bounce here on the 4 hour chart. If we zoom out to the day, though, things are the price action is really quite bearish still, of course, for crypto. And we can see the major white magic levels at 15,000 and even at 9,000. So it's important to be open-minded to the possibility that this could indeed keep going down. All right, so I think a lot of trading is really, it has to do with imagination and, understanding that, hey, even though we're up here at like 47,000, flushes down to 15 or 10 are possible. Anything's possible. So by treating these magic level crosses seriously, you can stay on the right side of the price trend. Okay, so that's the latest in crypto. Let's take a quick look at the Qs. Now, the Qs had some very interesting price action. So this is actually a super small chart, small time frame, 4-minute chart. And what we're looking at here on Friday is the sub magic levels that I shared with you guys over the last couple of weeks. And I've drawn this so that it goes from low ratio all the way up to the high ratio. And you can see how price just kind of ping-ponged between these sub magic levels here at 0.415 and 585, right? So super interesting price action here on the Qs. And again, you can also use the moon void of course setups within the Qs as well. The interpretation is exactly the same. Orange box means expect reversals and fake outs. Okay, so let's go over to the Time Trades web app and take a look at what it's telling us for what could come next this week. So here we are. We'll go back and take a look at the Qs. Big move down over the last 2 weeks, really, from June 6th to last Friday. The Time Trades forecast are calling for a gap in this down pressure combined with a few days of up pressure here. But it looks like more of a relief within the broader bear trend than anything else. We need to understand that we're in a secular bear market here that potentially could last for years, right? So the low risk trade is to trade on the short side and take profits at the end of these bear flushes down, right? So if you're conservative, you can take profits here on your short trades and let price come up and then re-enter just before this anticipated 2 standard deviation move down in early July. So we can kind of see like the waves of selling with these new, more detailed forecasts that are coming in, and we can see like this cluster of potential pivot highs over here in late August, followed by some 2 standard deviation moves down in early September. And if we compress things a little bit and move even farther into the future, we can see there's a massive cluster of probabilities of move down starting in November. So again, this is a ways off, right? But it's important to understand the overall context here in the Qs. So let's take a look at some of the other indexes and see if there's alignment between them. So the spiders are aligned with the Qs. We're showing, like a 2-3 day uptrend here, small pivot low happening on Tuesday, the 21st, with some probabilities of a 2 standard deviation move up Tuesday, Wednesday, and a big pivot high here July 5th. And after that, it's mostly down pressure. Okay, so let's look at the diamonds. The diamonds are showing a pivot low on Friday or Tuesday, followed by some up days. And it looks like the down pressure returns a little earlier in the diamonds, June 27th. So there seems to be general alignment between the 3 major indexes. We can take a quick look here at IWM, see what we see here. Again, general alignment, pivot high on the 27th, a gap in the down pressure for the next week or so, and significant 2 standard deviation move up planned for the 23rd, which is Thursday. Okay, so let's take a look at some of the major components of the Qs. We've got Apple. So Apple is generally confirming this. We've got a reduction in the moves down. We had a 2 standard deviation move up on Friday, although that just turned into a green bar. That's kind of what it takes these days to get a green bar, is you need a very strong probability update. Now we've got a return of the down pressure here kind of starting later this week, but we also have this pivot high. So it's important to understand the potential for inversions here, because this pivot high doesn't really make a lot of sense in the context of all of these forecast down days. So we could possibly see an inversion here where this pivot high is in reality a pivot low. We shall see. So this is why price is always the most important element in the time trade system. Okay, so that's Apple. Let's take a look at Microsoft. Microsoft also, we've got a little gap here for a couple days in the down pressure, and then it returns June 24th. So, this isn't the resumption of a big bull trend. This is really just, almost like a little relief rally. Okay, so be aware of that. Let me take a look at Google. Google looks like a relatively strong relief rally here, peaking Tuesday the 22nd, and a nice little gap in the down pressure here before it comes back June 27th and pushes things back down. We've got a significant pivot low here, July 6th. So the Google forecast is actually really clean, and I kind of like this as a potential roadmap for the market going forward. Okay. But looking ahead into late July, it looks like we do have a chance for a bigger rally up into July 28th. Okay, that's Google. Let's take a look at energy, some big moves in the energy complex over the last week. So we can start with XLE, the S&P sector fund for energy, and this covers oil and natural gas. So we can see here we had a big move down in the past week. Very little in terms of up pressure for the next month or so, and some big down pressure peaking July 13th. So it looks like the higher interest rates are finally catching up with the energy complex. Oil and gas traders starting to understand the economy is going to be weak. There's going to be less demand for fossil fuels. So that's starting to get reflected in price. It looks like we've got a forecast pivot high here, June 29th, but this is also amidst a bunch of forecast down moves. So again, this is one of those that could potentially invert. But basically any pops in price in energy should be sold. It looks like we're in a downtrend basically through till September. Okay. We can also take a look at UNG. I've been personally trading that a lot. It's got some interesting ETFs there with cold and boil. So this peaked June 8th. And then last week was very red. It looks like we might have a small gap in the down pressure on Tuesday, but then the down pressure returns here for July. So we've got a pivot low July 11th and very little in terms of up pressure forecast until then. So it looks like the trend is down for UNG since we've crossed this magic level here at 29. And we've made our way through these two orange levels here. It's not out of the question that it could come back all the way to 17 and retest that magic level there. Okay, so UNG is interesting, and yeah, we'll take one quick look at healthcare here. UNH. United Health Group is the biggest healthcare provider in the United States, and that's a huge part of the S&P. So looks like we've got a little chop here coming up. We've got some up days followed by some down days, and then we've got a pivot low on July 1st. But this might be a reasonable tradable period here, starting with this low July 1st and then coming into some increasing up days in early July. All right, so that is it for stocks. Let's do a quick look at crypto and see what we've got coming up here for Bitcoin. Okay, so Bitcoin is very similar to stocks in that we've got this reduction in the down pressure, a little gap or reprieve in the selling pressure coming up on Tuesday and Wednesday, the 21st and 22nd, and then the selling pressure returns. Okay, so we've got this cluster of selling pressure all the way through to July 5th. And then we've got another couple of waves here. So just taking a step back, there's obviously a lot more activity in this swim lane up here for probabilities of a down day compared to this swim lane down here for probabilities of an up day. Just keeping things simple, this tells me the trend is down, and then you can use the pivot lows to get some more precise timing here. It looks like starting from July 14th through to August 7th, that might be a good swing leg down on Bitcoin. Let's take a look at Ethereum. Okay, Ethereum is what do we have here? Well, again, like Bitcoin, there's just simply a lot more activity on the down days than there is on the up days. Okay. And it looks like we've got a cluster of down days here coming up, heading into July 7th. And then we've got a little pocket of up days from, like the 12th to the 16th. And there's very little down pressure during that time. Little pivot low up here at 14% probability. And then the down pressure resumes. Okay, so not really a crystal clear forecast on Ethereum, but on balance, more down than up. Okay, so I'm going to stop the video here, trying to keep things short and sweet, but I hope you enjoyed it this week. Good luck this week in trading, and we'll speak again next week. Thank you.